The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Well, good morning, everybody. Actually, it's afternoon if you're there on the East Coast. Obviously, I'm not Larry. I am Kate Stalter, and I have the privilege of sitting in for Larry today. So glad that he's going to be allowing me to host his show for the next few weeks while he's getting some much-needed R&R. And if you haven't heard my show before, I host the Small Cap Roundup Tuesday and Thursday at 11 a.m. Eastern here on TFNN. I'm actually out in the Mountain Time Zone in Santa Fe, New Mexico, so that's why I began the show by saying good morning, because it's little after 10 a.m. right out here in the middle of the mountains. Springtime has hit here in the mountains finally. Had a little cold snap before it got here, but just a beautiful day. I'm looking out from my office here on the snow-capped mountains. So very nice to be joining all of you today. And Larry's tagline there, trade what you see. Well, I do the same thing. Trade what you see. No prognostications. I don't go on forecasts. I do use charts as my buy and sell indicators, buy, sell, and hold indicators. So I'll be talking a little bit about some of that. We'll be launching a newsletter here in just a few weeks focusing on low-priced stocks and small cap stocks, so a lot of fertile ground in that area. So quite a bit that we can be looking at in that regard. Okay, so we have today, if you heard me speaking on Tom's show yesterday afternoon, I do the regular little guest spot there in the afternoon on his show. I was talking about a stock called, let's see, which one was it? EPAM, E-P-A-M. I'm going to put that up here on the Tiger TV for you. Let's see. I've got the chart of Annie's, which is that hot IPO that priced last night that began trading today. We'll talk about that too. But I just put a chart for EPAM up there on the Tiger TV. So that's a pretty interesting one. That's a Pennsylvania-based company. They do the IT services. And this one, if you're looking at a weekly chart there, you're not really getting the full sense on this particular view of what this has done. This is up, let's see, about 16% so far on the week. New IPOs, as I just mentioned, that can be some terrific ground for finding ideas. This went public back in February, and as I mentioned on Tom's show yesterday, this one was... It went public right around the time that the markets and the media seemed to be fixated on the Facebook pricing. So this one kind of snuck under the radar there. That happens a lot with IPOs. And this is something that is really just, you see this a lot. A small company will begin trading, doesn't get all that great media attention of these bigger, well-known mega cap names like Facebook will be when it gets out there. There's so much ground here. Newer stocks, recent IPOs, and when I say recent, that can be in about the past decade or so. I'm not even talking about the last few days. They have a long time to run when they're still considered relatively new companies. Relatively recent IPOs are frequently among some of the best gainers in the market in terms of price action. The best price leaders in the market. So they're definitely worth watching. So EPAM is one that I was taking a look at yesterday on Tom's show. It popped up on my screens after some big gains. It is out of buy range at the moment, not something you want to be jumping into. It's having a pullback today, quite normal, after a big jump yesterday. Let's see. Yesterday, I said it was up about 16% on the week. Yesterday, it jumped about 24%. Okay? So this is one you want to wait, let it consolidate, wait and see what happens here. It will present another entry point. You know, right now we're talking an entry point above yesterday's high of $21.25, the intraday high. However, a new buy point could very easily present itself, so that it's not necessarily the case that you'll have to wait for that before a new chance to get in. Let's see. Let's stay on the topics of IPOs, and this is one you might have heard about this because there's been quite a bit of media attention on this one. Let me pull this up on a daily chart. BNNY is the ticker I'm showing you right now. That's Annie's. I'm not sure the exact name of the company. I know the products very well. It's the natural mac and cheese. They make salad dressings, a lot of other organic food products, and Whole Foods is one of their big distributors. So that's really been this company's big advantage. But they do sell in other companies, in other stores. If I'm not mistaken, I believe I've even seen some of their products in Walmart. So they do get pretty wide distribution. But Whole Foods really carries a full line of Annie's products and has for many years. Annie's is the name. It's BNNY is the ticker. The reason Bunny is the ticker there is because that's their little corporate logo. And some terrific accelerating revenue growth in this company in the past few quarters. Just shown us some nice fundamentals, a little bit, some earnings declines recently. That's not unusual in a company just before, in the quarters prior to the time it does go public. So anyway, this is an interesting one to watch, definitely one to keep an eye on. Got another one I want to show you, Vocera, V-C-R-A. Okay, let's see here. Okay. That is Vocera Communications. Now, this is a tech company, and they provide mobile communications for hospitals. So this is another one of these that's just a little bit, maybe not the glamorous kind of cloud computing type of play that tends to get a lot of attention. But this one also had a nice debut this morning. It was priced last night and is showing some gains after its pricing, so could be another one to keep an eye on. I'll be tracking this one as it goes forward as well. One thing I want to add about the IPOs, these are not names that I like to jump in at the opening day because it's very, very normal to see some little post-IPO correction there. You do see some of the early buyers who flip the shares, who take some profits right away. So it's best to kind of let some of these newer stocks find their trading pattern, really establish themselves a bit in the market, and then it could be a time to jump in. So let's see. As always, I want to give out the phone number here. Let's see. 877-927-6648. Give us a call. Definitely would like to hear your questions today. As I mentioned up front, I tend to specialize in the smaller caps, growth equities, so that would be the kind of thing. If you have some questions about some of these stocks, give a call. We could talk about some of the trade and some of these. I look at stocks that are showing strength. I will buy on a dip, but I want to see key moving average support to buy on a dip. So not something that's slicing key moving averages and quote-unquote appears to be a bargain, because all too often a stock that is trending lower will continue that downtrend. There's been quite a bit of research to show that, particularly when it does go below one of those key moving averages, particularly the 50-day. I mean, if something is slicing below its 200-day line, you really don't want to be trying to time the bottom in that particular stock. Wait till it does begin to stabilize, show some more buying, and begin to travel higher again. So give a call. Would like to hear any questions you have about some of the smaller caps, IPOs, newer names. Let's go to a mid-cap IPO here that I've been showing for quite some time on the small cap roundup. And even though it is a mid-cap, it is one that I had been tracking since pretty soon after its IPO. And this is Michael Kors Holdings. I got a call about this one a few weeks ago, I believe, when I was guest hosting for Tom on one of his shows. KORS is the ticker on this one. Now, I have a daily chart for cores up there. I'm going to switch it to a weekly because I want to show you I am liking the trend I'm seeing on here. This is showing some consolidation right now after retreating from a high earlier this month. That's exactly what I have been waiting for, to identify a new buy point, to get in there. Now, this is exactly what I was just talking about. This is showing us, it's getting support right now above its 10-week moving average. Its 10-week moving average is at 41.50, and the stock is trading right now at about 46. Actually, let me see here. Trading, last I looked here, actually at around 45. So getting good support above that 10-week moving average. As long as that continues, it consolidates in a fairly orderly fashion. This is one that could offer a buy point, again, in the not-too-distant future, one that I definitely plan to keep an eye on. I also watch analyst estimates. I don't use fundamentals as my way of gauging buy and sell points. However, what the fundamentals do, as just some added background information, what they show you is the degree of confidence that the analysts, the institutions have in the stock at any given time. Now, they can be wrong. That's not unusual at all, as a matter of fact, and not always wrong to the downside. In other words, let's see, not always wrong to the upside. In other words, they're not always going to wildly overestimate. Sometimes they underestimate, and the stock, the company can show a whole lot greater earnings and revenue growth than anybody anticipated. That happens frequently. So, but while the estimates are not something you want to bank on, it just is an indication of the degree of confidence that institutions have at any given moment, because they account for about 75% of the activity in the market. It is their confidence and their conviction in a stock that does determine their actions. So that's why that's worth taking a look at right there. Okay, so Michael Kors, let me go to one more here that's come up. I have a little time left. Let's see. Okay, GNC, and of course that's a well-known name. Another one from the retail. It just has been pretty consistent that this consumer discretionary retail has just been a solid sector, producing a lot of leadership. Now, GNC Holdings, this is one, again, a couple weeks ago when I was guest hosting for Tom, my friend, former IBD colleague Ken Shreve. It was his guest spot. He called in and discussed GNC. This one a little out of buy range at the moment, but another one to keep an eye on. Good indicators on this one. Okay, I will be back in a minute. We've got a great guest coming up later in the show, Gennady Cooperstein, who's a terrific trader, mentor to other traders. So stay with us. You will want to hear him. Be right back after these words.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
All right, Ziggy played guitar and Kate traded stocks. Back today, sitting in for Larry. I really do like his tagline there, and I had meant to tell him that a while ago. I'm not sure I did, about trade what you see, because that is exactly the formula, not to be following a lot of guru predictions and opinions. There's just way, way, way too much of that, and the charts tell you what is going on. So, speaking of some of these small caps, lower priced stocks that I was mentioning before the break there. So we are looking at, I put up a chart of Wabash National. WNC is the ticker on this one. Now this one is trading today a little bit over $10 a share. So I do consider that in the lower priced range. When I say low priced, I'm really looking at stocks between $5 and $12. I am not talking about penny stocks, nor am I talking about some of the larger, more liquid stocks that more of the institutions can jump into. So, in other words, not the kind of market cap that anybody's going to confuse with an Apple or an ExxonMobil. So, this is Wabash. This is it's got a market cap of about $727 million right now, definitely putting it in the smaller cap range. Got an incredible beta right now of over 2. So this is one of those volatile stocks. You have to give some room. So, excuse me. So it's not the case that with some of these smaller names, you really just can sit there and buy and hold. Absolutely not. On the other hand, you have to give them a little bit of room to run. We had Sam Didio on the small cap show yesterday. He manages the RDO small cap and micro cap funds, and he was talking about small cap growth and the way that some of these do need to be traded. So he made the point that when you set your stops or your price targets on some of these, you do need to give them some latitude with this volatility. In other words, sometimes in some of these cases, it's not a great idea to set your stop too tightly. Say it like 3% or 4% from your buy point, because you might get shaken out of these things very quickly, and then the very next day you look at it and say, oh, there's another buy point that's presenting itself again today. So you could get shaken in and out of these things very quickly, and sometimes that does happen. I have had that happen to me, even historically, even in a case where I've had a small cap, very volatile stock dropped 9% from my buy point. I got out of it. I got out of the stock, and then it did rally. So that can happen at those times. There's nothing to say you can't get back in there again. Nothing to say that. If it does continue to act well, you can always buy again. You know, people that get mad at a stock and say, I'm never going back into that one again, take it personally. I think all of us here, we're traders. We know how ridiculous that is, but you see it happen. I've seen it happen. I've known people who have done that. So in the case of Wabash, definitely is one of those that needs some room to run. However, even lately, you've seen that it's been getting support at some key moving averages. So I'm showing you a weekly chart on there right now on the screen. This has gotten some good support, so it is one that is still showing some potential. Let's see here. Right now, the high was 1129 in that consolidation. So right now, it's about at 1155, just showing that to you on a weekly. And if you're looking at Tiger TV, I'm looking at that very small consolidation at the far right end of the chart. Okay? That's the one that I'm looking at. Now back here, this big base, this big pullback it formed last year, that was constructive because you notice it undercut the low of the prior consolidation. That's something else that I do look for, is some of these big pullbacks that can really set the stage for some fresh buying. So that's something that I did like to see, that particular action. So Wabash is an interesting one right now, getting good support above that 10-week average. Let's see. Looks like I'm running out of a little bit of time here. This segment's about to end. I want to give out the phone number, 877-927-6648. We have a terrific guest coming up after the next commercial break, a fantastic trader, mentor, and coach to many other traders and investors, Gennady Cooperstein. You definitely want to stay with us here and listen to some of his views, and he'll be talking a little bit about some of the stocks that he's been able to successfully trade in the last few months, and not always the household names that you hear about. So stay with us. We'll be right back. I'm Kate Stalter, sitting in for Larry today.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
All right, I guess we're not going to stick around long enough to go into Suffragette City. Okay, I'm Kate Stalter. I'm sitting in for Larry today. Very pleased that he's allowing me to host his show while he's away. So as I mentioned before we went to the break there, we have a very special guest now for this segment of the show. Portfolio advisor and private investor Gennady Cooperstein. And Gennady is also a coach and mentor to many investors and traders, so he's got a great perspective that I wanted to bring onto the show. And Gennady, there's plenty for us to discuss today. I know you were sharing with me some of your recent trades and some of the growth names, but you had mentioned, I just want to kind of set the stage, you had mentioned that you were beginning to get a little bit cautious on some of the sectors in the market, but not necessarily on the overall market. So can you start out by saying a little about that?
Hi, Kate. Thanks for having me. What's happening right now is the market's getting a little overbought here. Today especially, what I've noticed is if you take a look at the VIX index, we've actually established an uptrend in the VIX. So as the market's been rising here, fear is starting to increase. That's usually a pretty good indicator, at least short term, that something's around the corner. We're also getting a lot of news out of China, that China's slowing down. It's been getting a little bit of play in the market, but the market's been brushing it off. Today, the last 2 days, the market hasn't brushed it off. We've actually seen a lot more selling, and you're seeing a lot of these leading stocks starting to react to this slowdown in China. The other problem is we're having the euro against the U.S. dollar has reached the point where we've expected it to roll over and test the lows of the year. If that does happen, the U.S. stock market will mostly sell off. And the last place you're going to want to be then is in gold, silver, or any type of commodities.
Mm-hmm. Now, I think at the end right there, you were kind of starting to narrow it down to some of the sectors. What should traders, investors be doing right now? Because as I mentioned, you do coach and mentor a lot of other folks. What are your suggestions at this moment?
Right now, we're suggesting that investors start moving to cash. You don't want to be completely in cash. If, for example, you trade a Reg T account and you were fully invested at a 2-to-1 margin, you most likely want to bring it down under 100%. You don't want to be completely out of this market because based on the action even today, most stocks are acting fairly well. So we're still expecting a little bit more upside before we get the major correction. But we would start to move to cash, especially on the positions that aren't doing anything for you anymore. If you've got a stock here that's tested the 20 several times and no longer can hold that 20 and the 50-day is well below, you want to get out of that position because there's a very high probability that we're going to be testing that 50-day moving average. Now, if you're an intermediate trend trader, you can hold through and let that 50-day moving average test. Mm-hmm. But our theory here is that this could be like the 1970s, the late 1970s into the 1980s, where what occurred then was we would have 3-4 month rallies followed by 3-4 month sell-offs in the NASDAQ composite, not the Dow. You have to look at the NASDAQ in the 70s to compare the type of market that we're in right now.
Right. So in other words, it's kind of you have to be somewhat selective, it sounds like, but also very nimble. What as you were speaking, go ahead.
Yeah, you absolutely do not want to take any stocks right now for investment purposes. So if you've been sitting on the sidelines right now and you're watching Priceline and Buffalo Wild Wings and Apple run away from you, you do not want to be chasing these stocks. You want to stay away from them. You want to be patient here, even if that means you missed if there's 10, 20% more upside for these stocks in this particular rally. You want to stay away from them. You want to be patient. You want to wait for the pullback. It's going to come. Believe me, it's going to come. When that pullback comes, that pullback will be a viable pullback, whether it's a 5% pullback or it's a 7 to 10% correction. That's when you're going to want to invest your money again into the market. Right now, the best thing you can hope for are day trades. Most of the swing trading opportunities we've seen on our screens and the ones that we've taken over the last 2 weeks, they've failed. We've been taken out of them already, and the only positions that have been working for us are the stocks that we've been holding since the end of December and early January.
Right. No, I've noticed that too. There are a number of some of the smaller cap names that I talk about on my show that I was in several months ago, and those are just continuing to work. I think that's true. It's some of these setups are just getting very volatile. Let me ask you something, Gennady, just to follow up on something you remarked on a few minutes ago. You were talking about some stocks showing indications of being overbought. What indicators do you use to determine that?
Well, we just use extensions over moving averages and price volume action. What you'll see is stocks, for example, ISRG, it spent a lot of time moving higher on low volume. Typically, that's a bearish indication, but leaders that have been around for a very long time can do that. They can move up on low volume. The big problem is when everybody realizes that they've missed the boat and start to charge into the stock, you'll see an increase in volume. Most investors will look at that and say, oh, look, they're starting to buy the stock. It's actually the opposite. What's happening there is shorts are being forced to cover and the longs are being forced in because they can't stand the pain of missing the stock anymore. So really it's the last money coming in. It's not fresh money that's going to drive the stock higher. Even though the stock can move, like I said earlier, it can move another 10, 15, 20% from here. But once you get that correction, inevitably the stock will most likely pull back to the levels we're trading at now. So most of the stocks that you're looking at, there's a good chance that if you took the next 2 weeks off, 3 weeks off, 4 weeks off, you would most likely buy most of these stocks right around these levels anyway. So unless you're trading this market, you don't want to invest in them because now you're going to be forced to sit through the next shakeout. And that's very painful emotionally to most investors, including myself, to have to sit through such a pullback because when the time comes to buy again, you're not going to want to do it because you're going to watch so much profit disappear.
That's true. Even if it is a healthy, orderly pullback, holding above key moving averages, it's still painful because you've lost money in the trade.
Oh, yeah. I mean, the pullbacks, the way they start sometimes can be brutal, and they're very hard to decipher at first. I mean, when those first couple of days in the pullback or even a correction, it feels like the whole world's falling apart. So you really don't want to be in it because it's painful. It's painful mentally, physically. You can't sleep at night. And then ultimately the market gets around the moving average, like you just said, and there's that one more day where you wake up, the market's gapping down 1.5%, and you just throw the baby out with the bathwater and say, I had enough. And that's usually the time they reverse the market and they start heading higher. So that's why I advise clients right now, if you haven't participated in this market, just stay away from it. I know you're missing some upside, but believe me, mentally, you'll feel a lot better 3 weeks from now, 4 weeks from now, when you're now sitting in cash rather than sitting in stock that you're losing money on.
As you're speaking, something else occurred to me just in talking about some of the mistakes that a lot of investors make. And, we're all prone to these emotions in the trading. Everybody has to be very cognizant of this. But, as you're talking about people jumping in as a stock trends higher, as that being a mistake. But the other thing, sort of the flip side of that mistake, is people write off the stock as it's trending higher. They say, I've totally missed it, rather than, as you're saying, keep tracking it, wait for the pullback, wait for your buy opportunity. I see that a lot, too.
Yeah, it's very rare. We've done a lot of historical studies on big winners, and we found that it's extremely rare that a stock just trends up its 10-day, 20-day moving average, never giving you a chance to buy it off the 50 or out of another consolidation. I mean, I would say it's something like 1 out of every 20 stocks will do that. The majority of other stocks, they're going to come back at some point, whether it's slightly higher from here or slightly lower from here, but they're going to come back and they're going to give you another opportunity. And if they don't, so be it. You cannot worry about those missed opportunities. You got to be out there constantly looking for new ones. I mean, what investors should be focusing on is, recently we've seen a lot of old leaders start to come alive again, besides the ones that have already come alive, like Apple and Priceline and Buffalo Wild Wings. I mean, you got Amazon.com that's coming up to the 200-day moving average. You have stocks like NetEase, CRM, VMW, Baidu. They've started to break out, probably a bit too late in this rally to make too much progress, but keep an eye on them. These are the type of stocks that if we do get one of these 5, 6, 7-week pullbacks in the market, these are the type of stocks that can sit here, form flat bases, pullbacks to the 50. Even your traditional cup and handle double bottoms could form. So stay on top of it. Stay on top of it. Do not fall asleep, because the minute you fall asleep, this market will turn. And once again, you'll be watching from the sidelines. And I did that all through the 90s. I watched the market from the sidelines constantly, because every time the market turned, I said, there's no way it could go up again. Then as it went up for 2-3 months, I said, I have to get back into this. And then I sat through the shakeouts. It was just a mess. So sit in cash, watch these big leaders, and especially the large cap tech leaders. When you asked about sector, I mean, that's really the sector that's outperforming right now is large cap tech. Oil's a nice sector too, but now yesterday we heard that they might be releasing more oil from the reserve. So that can keep the sector down. But this Iran-Israel issue might resurface. And if that does, oil most likely start to head higher, and you'll get a chance in the oil stocks. So keep an eye on large cap tech. Keep an eye on the oil sector. Keep an eye on these retailers who are also on fire since the beginning of this bull market. So there's plenty to watch. There's just nothing to do at this moment.
We have a few more minutes here. I wanted to see if you could speak about some of these consumer stocks. I know you did send over to me the summary of some of your results recently, and maybe just talk about some of these consumer names that you have been invested in that have been big winners.
One of the consumer names that we were in that we made money on was Ralph Lauren. Recently, it seems the economy is picking up steam here, or at least it's not slowing down, and people are out there spending money. And, when people have money, they want to dress nice, and they're going to be looking at stocks like Michael Kors. They're going to be looking at stocks at Ralph Lauren. These guys set up very nice bounces. Michael Kors set up a beautiful IPO. It's consolidating now, and it could potentially set up what would be traditionally called a high tide flag year. I'm not looking for it to do that. I would think it sets something up, probably goes up another 50% from here eventually. Your typical high tide flag patterns will come out of your larger cap names. They're much better. We had, I'm trying to think, Under Armour has broken out, and that's been moving. Deckers is actually looking very bad. I would avoid Deckers at all costs. Seems the Uggs craze might be over finally. And even if it's not, it seems if you've bought Uggs, you've already have Uggs. There's not many more consumers that are out there to buy Deckers. But definitely look for companies in the consumer space that are gaining market share. They're expanding into new products. Michael Kors was the best example in this rally. There's another stock that's a recent IPO that also recently broke out. It's FRAN, Francesco's. I would also keep an eye on that one. It's a little ahead of itself right now, but watch it over the next few weeks. If it pulls back and acts quietly like it did inside its handle, again, you might be able to get a nice run out of that stock.
Now, Gennady, let me follow up just on that particular one, because you've named a couple that I've talked about on my show quite a bit as well, as I'm sure you can imagine. But Francesca's, that's a small cap, and I know that you had mentioned to me recently that maybe the small caps are not necessarily your favorites at the moment, although I do understand that there would be exceptions. Can you say a bit about that?
Yeah, that's about it. Right now, what we're seeing is a transition from mid caps to mid caps to large caps. The way we saw small caps transition to mid caps in 2010 and 2011. So you're always going to have one small cap, two small caps around, but as a whole, they're not really acting well. You'll see they're much more volatile these days. They're not setting up. You're seeing most of the money go into the large cap names. And that's because we're past that recovery phase in the economy, and we're more on that steady climb. And this is where those small caps of past are now mid caps and large caps. So stocks that you would have seen back in 2009 just appear on the scene. Like maybe Monster beverages. Even Priceline back then wasn't considered too big of a large cap stock. Now suddenly these stocks are grown up. And that's where the money's going. I mean, these stocks are delivering unbelievable. These mid-cap and large-cap stocks are delivering unbelievable earnings and sales growth, while small caps, they're not very exciting. So the large caps are driving the market, and that's where you want to be in. And as long as the money's flowing into them, you pretty much want to avoid small caps.
Let's talk about a couple others maybe. You've got a number of interesting names here. I know you've got Tempur-Pedic is one that a lot of people have been watching. Can you say a little bit about that?
Yeah, the only thing I can figure out about that is I guess everybody's upgrading their mattresses. They're tired of those old coiled springs, and they're looking at these memory foam mattresses. I'll tell you, I was in San Francisco over the summer for a wedding, and my wife and I slept on one of these foam mattresses for about a week. I felt fantastic.
There you go. They sold you.
You can buy them at Costco kind of cheaply now. But listen, I guess there's an upgrade cycle. It's just like clothes. Right. Eventually you want to upgrade your clothes. You upgrade your clothes, and people are waking up and saying, oh, my shoulder hurts, my neck hurts. I want a comfortable mattress. And we've been talking about getting a mattress. I'm just cheap sometimes.
I think our segment's winding. Yep, there it is. There's David Bowie. Gennady, thank you. This has been great. Thank you for joining us. You'll have to come back again. This has been a lot of fun.
Thank you, Kate.
All right, talk to you soon. Stick around. We got one more segment back here. Bye-bye.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry, or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Last segment of the show, as always. It flies by. I'm Kate Stalter, your guest host for this hour. I will be back tomorrow morning with the Small Cap Roundup, the show I normally host. That is 11 to 12 a.m., 11 a.m. to 12 p.m. Let's get that correct. Eastern Time. So let's see. Gennady gave us some great stocks there, and you know, a number of them that, as you know, that I also track. You notice that a few of those that he mentioned do tend to be those kind of recent IPOs, like I always talk about, as I started out the show today by saying, that can be very productive ground to be tracking stocks if you get into them at the right point. Don't try to jump in on the opening day. Just let them play out, find their trading character. So I've put one up there on Tiger TV, a weekly chart of something called Tango, T-N-G-O. This is one of my holdings, full disclosure here. Now, this one went public back in July of last year. Definitely a small cap, has a market capitalization of, about $618 million. It's got some decent liquidity these days for a smaller stock, moving about 420,000 shares a day. So that's not bad for a stock with that kind of market cap. You generally a little safer. The higher up you go, just in terms of liquidity, you're less likely to get shaken out. Because, of course, with smaller stocks, you have fewer institutional owners, it can really just take one large institutional holder to say, okay, I'm taking some profits, I'm moving on into something else. Even if there's nothing particularly bad happening in the stock, you can get shaken out very quickly. So that's why the liquidity does matter and why it's always an extra risk with these smaller names. So Tango, the company makes telephone communication system software. This is one of those companies, it's a small one, but I seem to hear quite a bit about this one. And right now, it is holding above its 10-week moving average. That's the type of consolidation that we've mentioned several times on the show here today. I was talking about it. Gennady was talking about it. So I did make a little bit of an aggressive buy on this one as it found some 10-week support in there. And sometimes you will see a little bit of pullback, but this is acting fine. It has not triggered any of my sell rules as of yet. It's still acting well, so I'm holding on to this one. There was a pretty big downside reversal in the stock yesterday, and as I said, that did not trigger any sell rules, holding nicely above key moving averages. I didn't see any news kind of in the mainstream press. I did a little more research, though, on some of the brokerage websites, and I noticed that the company is selling shares. Insiders are selling, some of the investment banks that underwrote the IPO back in July. So that's just some of those guys taking some profits, most likely. Happens all the time once the stock has begun trading. I know a lot of times people tend to panic when they hear the phrase insider selling, thinking something is wrong, but just very, very normal in these particular situations. So I'm just letting you know about this particular stock just to give you an idea of some of the thinking behind some of the names that I do discuss on the Small Cap Roundup and that I will be showing you in the newsletter that will be rolling out in the next few weeks. So just a little indication there. Okay, it looks like our time is rapidly dwindling down here. It's been great that Larry has given me the opportunity to sit in on his show today, and I really appreciate the chance. I want to make sure that everybody joins me again tomorrow morning, 11 a.m. Eastern, for the Small Cap Roundup. I'll talk to you again. I'm Kate Stalter, signing off for today. Thanks for listening, everyone.